Hello, good evening, everyone. Thank you. We have another stock update today on the Dow Jones average, as promised. Thursday is over. We had a unbelievably big bad day for the Dow. Down 543 points today. It looks like it shook. I don't know. After hours, it looks like it went down even more. Not sure where the futures are at. Let's take a look at the futures. Yes, it did. Looks like we fell a couple of hundred more points. Why did it go down so much? Well, we got a few things going on. Number one, we have a jobs number coming out tomorrow that everybody expects is going to be too high. Fed Chairman Jerome Powell is not going to like all the companies hiring, paying more wages. It's inflationary, more workers in the workplace, more money being spent, more jobs, good things for the economy, bad things for his mission of slowing it down. He's raising interest rates in order to slow down this economy. And, well, it's just not working. It just keeps speeding up. The bulls have embraced this for quite a while. Every time it goes up, there's a zippity-doo-dah, and it's going up, and we're going to have a soft landing and just go up and up and up. And it's starting to sink through. I think the Fed meeting on Tuesday and Wednesday, where he answered questions for the Senate in particular, he answered a lot of tough questions, and he very clearly stated his mission for the 500th time. And I think people listened to him a little bit more. He said, "I'm going to wreck the economy until inflation is gone." And people are starting to believe him. And now they're waiting for inflation to go away. Seeing this many jobs, if they see another 3, 4, 500,000 tomorrow, it looks like they might have pre-priced that in there today, by the way this is looking. Down 700 and something points, almost 800 points between the after hours and the shift today. Unbelievable surprise. The market woke up going up 200 points. I thought the bear rally was going to be over until tomorrow, and it just picked up a full head of steam. Sad for me, I got rid of my short position on the Dow. I missed out on today. I had some faith in the bulls acting stupid for a day, and I guess I shouldn't have had that faith. I thought they were going to try to pucker the market up before the numbers tomorrow. I was going to put the short back in, but now I feel like I missed the mark completely. I don't know if I want to short it at this. If those numbers come in at 200,000, 250,000 tomorrow, the bulls are just going to take over this thing and run with it at least until Tuesday. They're going to run with it all day tomorrow. They're going to run with it all day Monday. And if they get a break-even inflation report on Tuesday, that's going to be enough for them to be bulls again. Bulls outnumber the bears on Wall Street. I don't know what the percentages are, but my guess is 4 out of 5 people in the stock market are genuinely bullish. What they're doing is they're looking for a stock that they think will go up in the future, and those are the ones that they're buying. Maybe they're dividend stocks, but they're wanting the stock to go up. They're not short sellers. They're not reverse ETF players. Most of the volume in the stock market is going to be on purchasing stock and selling that stock. So I think by virtue, I think 4 out of 5 players are long. So it takes a lot to beat them. It's a good reason why the market goes up year after year after year after year. They really, really, really have to give up and throw in the towel for this thing to come down. They threw in the towel and they didn't want to see what was going to happen tomorrow. This was, I don't even want to see the numbers tomorrow because I think it's going to be a bloodbath tomorrow after they see them. I think they pre-priced the bloodbath. I don't know how bad it's going to be or what real meaning is going to come of it. If it's 500,000 jobs tomorrow, well, that's a lot less jobs. The job gap just shrunk. To me, I would think that would be a good thing. That would mean that the services inflation can come to an end quicker. Maybe it'll be slightly inflationary in the short term. The big number is Tuesday on the 14th. I think everybody knows that February was not a winner so far as inflation goes. I think we're going up another maybe 1/10%, well, 1/10 of 1%, maybe 0.2%. It's going to be an increase in inflation. There is a chance that it will be break-even inflation. I think there's almost no chance that it will be a decrease in inflation. But if they're going to raise rates again one or two more times, if they didn't do the 0.50 and the 0.50 again, let's just say, it seems like it's down from 8 or 9%. I mean, they got it down to like 7.5%, and the core is down to 5 to 6% range. It seems like they've already chopped 33% of it away, and it seems like it's almost at a stalemate kind of thing. Yes, it needs more work. I do feel like they have some control of it to the point of we're not going 9, 10, 13, 20. We're not going, apeshit bananas with it. So because of this semblance of control, if the used cars causes this thing to, break even on Tuesday, let's just say, healthcare went, got better, maybe used cars got better, maybe, well, nothing else did. I think gas got better a little bit. Food definitely did not get better. Food got a lot worse. Electricity got a lot worse. Rent got a lot worse. Just about everything got a lot worse. That's why, but they do compare it year over year, and we're starting to compete with ridiculously high gas prices from last year on the year over year numbers. So month to month numbers might be more meaningful at this point. But yeah, I'd say break even or near break even. Just a trickle more of inflation is what you're going to see on Tuesday. You're not going to see an inflationary boom. If this thing turns out to be even or just a trickle or really close or better than the estimates thought but higher, any of those things, the bulls are going to be re-empowered, reinvigorated, and they're going to run this thing up like a madman. And it makes no sense because here you have Powell saying, until it's 2%, he's going to keep beating up the marketplace. But on the other side, he's got the hawkish talk. But is he a hawk? And I would venture to say no. The man's not a hawk at all. I'd say he's all dove. I would say that the members of the Federal Reserve are political animals. The new vice chair has just been appointed by the White House. Senate's going to rush them through. They just put Austin Goolsbee, Fox News and CNN liberal contributor, used to be a financial advisor for Barack Obama. They just yanked somebody else off the Fed and replaced him with Austin Goolsbee. There's a lot of tinkering there. He's literally pulling players off the Federal Reserve. And if you listen to the speech on Tuesday, Jerome Powell explains that they make all decisions by consensus. Basically, he sits all the Fed chairs down at a meeting, and they all vote on things, and they go with the determination of those votes, and those are the decisions. And I don't know why he just doesn't want to be in charge. He decides to do this by consensus. That's a little disturbing. Because of this consensus, hand plucking people off and replacing them with people that you prefer for political reasons changes the whole paradigm of what the Fed wants to do. If the Fed has absolutely any excuse to go 0.25 on the March rate hike, he will. Absolutely. If we come in at 275,000 jobs tomorrow and 1/10 of a point up on inflation, he might just do 0.25 again. The 0.50 is going to be for the train wreck news of 500,000 jobs, or a few points, a few tenths of a percent up in inflation. That's my guess. I think he's a dove. I think that he wants to not hurt the housing market, not hurt the jobs market, and be able to raise rates to where they are now, which is just a fair market for money. You're not supposed to be able to get a $400,000 house for $1,700 a month. It's never been like that. Not in the history of the world has anyone been able to pull that off, except for recently. We have a great majority of the country barely have a mortgage payment in comparison with the house that they got. And they got that because they got that nice fixed 3%, 3.5% loan. In the history of the country, people are, 7, 8, 9, 10% loans are more normal. The banks can actually make some money. They charge the banks for taking the money. They don't just give it to them for 0% or close to 0%. Things are probably just about normal now. Will that fix inflation? It's not fixing the services sector. The only thing that's going to fix the services sector is have those jobs get that gap get erased, and then have employers. He's going to have to hurt the economy to do this. He's going to have to do enough damage, or there's going to have to be enough inflation. If there's enough inflation, that's also going to drive people back to work. It's going to make them more desperate. It's going to make them more hungry. It's going to make them need more money, and they're going to have to go get a second job or another job or work more hours and do it for less money, and they're going to do whatever they can to survive. So I guess the worse the economy gets, the better the services sector is going to get, so far as stopping the hyperinflation that's occurring. He's not going to be able to control that, and it's apparently like 60 to 80% of the number is the services sector. Every product is made by people, assembled by people, shipped by people, stocked by people, delivered by people, checked out at the cashier by people, managed by people, assistant managed by people. There's so many people in the food chain on a watch or a bathtub or a mattress or whatever the product is. The assembly line, the people that make it, the people that put it together. Almost every product can be translated into a service. You could just say, well, services cost this much and the materials cost this much. Materials is one cost, and then pretty much everything else is services. And that comprises the most of it, and the problem is encompassed within. My prediction for tomorrow, I'm going to go with a medium-high jobs number. I'm going to say it might not be 500,000 again, but it might be, if all these fast food restaurants are landing employees big time, it could be 500,000 again. Most of them are hospitality jobs, and God knows they need them. Most of these restaurants can't keep their stores open past 8 or 10 o'clock at night when they used to be open 24 hours. So we're in a very weird situation in the world. They need to bridge that gap. Once the employment is full at the restaurants and the hospitality industry is flush again, I think we're going to see a lot tighter demand on the workspace, on the services sector, and we're going to start to see things normalize. Maybe prices settle down. A lot of these price increases have been baked into state law, so there's really no lowering them. Florida's going to $15 an hour, mandatory. So the problem might be permanent to some degree, but somehow they're going to have to lock it at that 15 and not let it run up to 28. I think Target's paying 22 now. Chipotle's paying 17 to 20. Chick-fil-A is paying 17 to 20. These are for teenagers. These are their after-school jobs. They're awesome employees. These are the best of the best. These companies now, because they pay that much money, there is obviously a big advantage to it. You get better service, you get better workers, you get a more efficient store. There's almost a lot of good positive reasons to pay people more. Um, you do get better workers. All the bad ones are well, McDonald's is at $12 an hour. They're actually pretty darn nice. They do a good job hiring. But if you go to some of these places, they don't even look at you. You can walk in to order food and they'll be too busy to do something else for 15 minutes. You could just stand there staring at the wall, wondering if anyone's ever going to look at you, or, is the server going to come to my table? You might be there for 20 minutes. No kidding. It's really gotten that bad. I don't know what it's like where you live. I'm in Florida. It's horrible. Almost everywhere you go is just a train wreck, unless you go to Chipotle or Chick-fil-A and a handful of other places. But yeah, we're looking at a train wreck. What's baked in for tomorrow is a crappy report tomorrow and him raising rates 0.50. Does that mean the Bulls aren't going to take this thing over like very soon? They might. They very well might. They just need any excuse to be a bull, and they will be a bull. So you bears be careful out there. If you get some really convincing numbers, I'm going to wait till after these reports come out, and I'm going to go back in, because it's really nice when the bulls become defeated, and they internally they can digest it within themselves. They know, okay, inflation's going up for sure. Once they start feeling that way, you go back to July of 22 and through October of 22. Look at the stock market. Just watch it go down, 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 down every day. There's no rush to get in. When they're defeated for like a month or 2 months until the next data comes out, which reinvigorates them and makes them run crazy again. But once you see some data come out that turns a bull into a non-existent animal, yeah, you can be a bear, and you can do it with comfort, and you can do it for months. When you become a bull, you can do it in comfort. You can do it for months. Don't pick sides. Just go where the market goes. It's okay to get in a little late. You don't have to be the predictor of things. Not necessarily. This thing, the Dow's at 32,000. It's ridiculously high if we're going to have a recession. A recession is going to take this thing down to 23,000 to 24,000. It might go lower than that. So you're not late to the party. If the high jobs report comes out tomorrow, you might want to react to that. I don't think that's as meaningful as Tuesday. The inflation report's the big one. If it's a big uptick on the inflation numbers, yeah, go ahead and dive in as a bear. You're going to own the town for about a month. Watch the bull sweat until the next report. There won't be any going up. It'll be going all the way down to Dow 28,000, Dow 30,000. I don't know where it's going, but it's just going to go down steadily 4 out of 5 days. They don't wake up in the morning with plans on buying anything in that environment. And it's all about the environment that you're in. And I don't think you need to rush to get in on these things. I lost a hell of an opportunity today because I wasn't a guesser. I really wish I wanted to be in and take the guess that it's going to be a bad jobs report, because, wow, the day early, this thing actually puckered up for it properly. It's puckering right up for a crappy jobs report. We also had a little banking crisis, a little crypto running through the system, wiping out possibly a couple of big banks. They have very good, the Dodd-Frank rule keeps their capital infrastructure tight. It's very well moderated now. I don't think we're going to have a wider banking issue. It was kind of like a one-year fear. I think some of their earnings were down, and a couple of them busted on the crypto. Only 2 of them were exposed, but Silvergate and Signature are probably history. And yeah, they're big banks, and I don't know, there won't be a bailout probably. It's going to go down, and they're going to pay their depositors back, make them whole. It looks like they're going to be okay as far as doing that. But anyhow, that's my blah, blah, blah for what's going to happen tomorrow. Bears, be patient. See what happens on Tuesday. If it's good news for you, yeah, the Dow might be at 31 too. Dive into it. It's going to keep going down. And bulls, if this thing breaks even or comes close to breaking even, don't be scared to get your feet wet. This thing's the bulls. You guys just need 1/100% of an uptick on healthcare and used cars, and causing the whole thing to shift to a 1/10 uptick on the CPI report in your favorable inflation came down direction. And you guys are going to go nuts and run this thing up to Dow 35,000 again like you did last week. So, yeah, wait till afterwards. Unless you like gambling. I think if you wait till afterwards, yeah, you'll miss out on 500 points, but you're not gambling. You can dive in right when everyone else is diving in the same direction they're doing. Yeah, you're going to miss the 500 points. But yes, you're still going to get the next 1,000 points in that direction. Whichever it may be, and the CPI report's going to tell you what direction it's going to be. Just reading the headline numbers, you can tell that. Maybe you should read the entire report first. Don't go too fast. I noticed everyone's on streaming right now. If you're watching streaming cable, if you're watching streaming Sling, if you're watching Pluto TV, Bloomberg TV, I would recommend Yahoo Live. Yahoo Live seems to be about 20 seconds ahead of all these other streaming services. And do it on your phone. It'll turn it into a small window. Maybe you can trade on your phone. I've been doing Yahoo Live, and I've been getting Jerome Powell much more live than I get him otherwise. The ticker symbol live on my phone, live on the YouTube stream. It's very fast. So YouTube streaming, I feel like, is the fast medium for streaming. If you do want to watch a Fed speech, and you notice the whole thing starts crashing before it even starts, and you're like, damn it with this streaming. Yeah, that's what the problem is. It's your streaming. All of us are getting this news 30 seconds after it happens, and the trades are going off and going crazy. And it usually jumps in the wrong direction first. So if the CPI comes in more inflationary, the thing might go up 200 points before it goes down 800 points. Go based off of the news. Don't go based off how it starts out. You got to wait for the streaming to finish streaming, then you got to do what you got to do. But get the fastest streaming you can get your hands on. Get the livest news you can get your hands on. If you can think of a faster way, please leave it in the comments below. I would like to know at 8:30 tomorrow morning what the job numbers are. I'm probably not going to know until 8:31. I'll probably know what happened by the futures launching in one direction or another. But then once the market opens, the public sentiment and the volume pours on. And that's when things get interesting. But read the reports, make your move afterwards. That's my advice. Take the gamble out of it. Have a wonderful night, and good luck on Friday tomorrow, and good luck on Tuesday. We might do another report on a projection for the Tuesday CPI report. We're going to go category by category and break it down. Anyhow, check out my future videos. This is James. Thank you for listening.